Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Welcome, everybody. Big earnings day today. I asked a couple of my good friends who are also crazy about the market and in a lot of these companies, Jason Hall from The Smattering to join me, and Jon Quast from Working Capital JQ. How are you guys doing?
Hey, Travis. Good, doing good.
I'm excited to be on it, John. It's been a long time since you and I did anything together, so I'm really excited.
True.
Jason and I talked about Verizon yesterday. A lot of sort of similar information from AT&T. I'll just go over kind of the high level numbers. Net add 2.9 million during the year. I just moved the quarterly number, but a pretty solid quarter as far as net adds go. And part of that is additions to their fiber business. I do think it's interesting to think about the strategy difference that Verizon has and AT&T has right now. Verizon is really leaning into what they call their fixed wireless, meaning 5G wireless, and AT&T is leaning into fiber. So two different strategies that are at least adjacent to each other. You can see revenue growth was not great from a year ago, especially when you look at the subscriber addition. So that's partially because they're not selling as much hardware, which is something we also saw with Verizon. But they did have really strong cash flow from operations. So that's a positive for the business. They have two segments here. We'll cover mobility first, incrementally a little bit better than a year ago, $21.5 billion in revenue, and EBITDA margins ticked up a little bit higher as well. Postpaid phones, that's another thing that's going to ebb and flow, but 656,000 additions there. So that's pretty solid, and they've been adding over time, which is, again, something that Verizon has been much more choppy at. Here's their wireline business. So consumer wireline, and then the business wireline is actually where they make a majority of the revenue in this segment. So again, not going to knock your socks off, but just kind of a steady as you go business. The one thing that I think is always interesting to think about with AT&T, I would argue that it's maybe a better operator than Verizon, but then you get items like this, because they had a huge loss during the quarter, and a huge part of it is goodwill impairment of $24.8 billion associated with business wireline, consumer wireline, and Mexico reporting units. So
when every investor out there was saying, hey, well, all the bad stuff's done, they've spun off the entertainment business, we can move on here. And then this, right?
Yeah, and that's what I keep going back to, is they get the big things from the operating standpoint right, and then they mess up some sort of huge acquisition or merger that just doesn't need to happen. They do have their Mexico results in here. Mexico is growing, but it's losing money. If you're AT&T, why are you in Mexico? Just don't be there. So Verizon has done things like buy Yahoo, but those were really small numbers. AT&T bought Time Warner and DirecTV. And those kind of deals are just destroying shareholder value. So it's like you have this cash cow business, and then you just light the money on fire on the other end. That's what I think drives me nuts, because I would love to say, hey, buy AT&T, buy Verizon, maybe even buy T-Mobile, and just have a basket. Telecommunications isn't going anywhere. Wireless isn't going anywhere. It's going to be a really profitable business long term. But every time I look at AT&T, I go, gosh, what are they going to do next? What are they going to do to mess up the balance sheet and incur some sort of multi-billion-dollar loss next? But what did you guys think when you're looking at these results? Jason, you want to start?
Yeah, no, I think it's one of those things where you really, hopefully this is just a product of some legacy challenges within the business, and that we have the CEO that's been in place has been there. Is it a year now? I guess it's probably close to a year, leading the company forward, right? And to really be back to basics and focus on a core telecom business, driving the things that are really going to affect its business, fiber, the wireless business, 5G that it can use, because 5G is really an opportunity. As much as I talked about with Verizon, that it's like you have to do it. If you're AT&T, you have to spend this tens of billions of dollars every year for 4 or 5 years to scale it up, just to maintain your existing customers, wireless customers.
Yep.
But it's also such a sea change, because it can handle so much more data that you kind of have optionality, right? If you're a data user, you're in a remote location, you don't have access to fast internet. 5G all of a sudden can change that. If you're a business and in your operation, you have machines that need to be connected.
Cars are now coming with 5G.
Right.
Yeah.
Yeah, there's so much opportunity to grow, right? To just literally grow the business in terms of that data business with 5G. That I think it's really important they continue to focus on that more than anything else. I hope that the past lessons that current management has going to continue to learn from those and allocate capital better. The balance sheet is stronger, right? But this is a company that still has what, $136 billion in total debt, but it has a lot less cash than it did pre-split as well. So it runs leaner from a cash perspective. So it really relies on turning that cash and living within its working capital more than it did prior. So that means the margin of error, the margin of safety is narrower to execute well. I think that's really important for investors to consider, particularly as interest rates and that cost of capital continue to move higher. It's not going to have the same ability to make those giant mistakes and them not be, they're going to be more costly if it makes those big mistakes going forward because it runs leaner within its working capital, and it still has a tremendous amount of debt that it has to service.
Yeah, $136 billion in debt is the number, and the cash on the balance sheet right now is $3.7 billion. So that's pretty tight, like you were saying. Again, like for Verizon, I would argue that AT&T is another company that the right way to allocate capital might be to say, hey, we're going to stop paying the dividend for a year or two or three and start paying down debt. Investors don't like that. So that's not going to happen.
Well, they've already cut the dividend once, right? Can you do it again?
Yeah. This is always a conundrum that some of these companies get themselves into. You gotta just keep the dividend going, raise it slowly but surely over time. But I would really like to see them pay down debt to give them a little more flexibility. John, what are your thoughts here?
I don't really follow the cell phone industry, these carrier providers. So I'm listening and I'm thinking about this from a very high level. I'm listening to what Jason is saying about growth opportunities for AT&T and whatnot. But as you look at these businesses from what is their business comprised of right now? Those aren't really growth industries. We're at a very high level of consumer adoption already. And so there's great cash flow, right? And it's very tempting from a investment perspective to look at a 6%, 7% dividend and say, this is a fantastically cheap stock. However, a business at this stage of its life cycle, they really have to nail that capital allocation because they're not creating much shareholder value from the growth opportunities. The shareholder value creation is happening from how they're using that capital. And if they are making those mistakes with buying businesses that don't make any sense and investing in things that don't make any sense, this isn't really a market beating opportunity. They have to get that right, in my opinion. So that would be my biggest concern is I'm looking at AT&T, seeing that impairment charge once again show up. It's always rearing its ugly head, as you point out, Travis, but I'm also hearing what Jason is saying. There are opportunities there. Does it have the track record at this point to put your faith in this team that they're going to be able to make those better decisions going forward? I don't know.
Yeah, I'll just give the final words here. I own shares of Verizon. I have looked at shares of AT&T. Like we talked about with Microsoft, I like the potential of buying cheap with the opportunity to maybe grow into some of these things. The data usage and mobility, autonomous driving, virtual reality, cloud. There's all kinds of things that we can start using 5G for. And I think we're only starting to scratch the surface of that. But they've got to do it. And I think that's where we are right now is, are we seeing momentum in some of these potential growth segments? I like Verizon growing in fixed wireless, basically replacing cable with a router that's plugged into your wall and going 5G, peeling off customers from cable companies. I would like to see AT&T doing the same kinds of things. I would like to see both of these companies figure out ways to add value to some of these ancillary businesses that we don't hear a lot about. I'm sure they're working with them. Maybe as autonomy becomes a bigger thing, this will be a bigger draw of data. But I think, a little bit more optimistic than you guys, but I totally understand the concerns about capital investment and things like that. All right, we will be back here on YouTube and Twitter live as much as we can during earnings season. Don't forget to follow John at Working Capital JQ and Jason at The Smattering on YouTube and, of course, on Twitter as well. You can find me at Riiv Investing. Thanks, everybody, for watching, and we'll see you all here next time.